Hey there, savvy investors and curious minds. Welcome back to a channel where we demystify the markets and shine a spotlight on unique trading opportunities. Today, we're diving deep into stock that's popped up on our hard-to-borrow screener with some truly eye-watering numbers. Global Interactive Technologies Inc., trading under the ticker GITS. GITS operates in the communication services sector, specifically within internet content and information, and it's a tiny player with a market cap of just $7.03 million. But before we get into the specifics, please remember, important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Global Interactive Technologies Inc., or GITS, through its subsidiary, is a technology-focused platform company based in South Korea. Their primary offering is Training, a digital fan engagement platform designed to support online fan communities, facilitate content discovery and sharing, and encourage user interaction. Now, let's look at its recent performance. Show chart, GITS 30-day chart. Looking at the price action, GITS has seen some declines recently. Today, the stock is down -5.69%. Over the last 5 days, it's fallen by -6.57%, and if we stretch out to the last 30 days, GITS is down -16.39%. Volume has also been quite low, with today's volume at just 6,996 shares, a stark contrast to its 30-day average volume of 72,259 shares. This gives us a relative volume of a mere 0.1x average. These numbers set the stage for our discussion about why this small, low-volume stock is attracting so much attention from short sellers. What is cost to borrow and why it matters? So, what exactly is cost to borrow, or CTB, and why is it so crucial? When an investor wants to short sell a stock, they first need to borrow shares from another investor, usually through their broker. They then sell these borrowed shares, hoping to buy them back at a lower price later and return them, pocketing the difference. The cost to borrow is the annualized fee the short seller pays to borrow those shares. Think of it like interest on a loan. A high cost to borrow indicates that either there's very high demand from short sellers to bet against the stock, or there's a very limited supply of shares available to borrow. When you see fees exceeding 100% annualized, it means short sellers are paying a significant premium, sometimes even more than the stock's value each year, just to maintain their positions. This tells us there's intense short interest or extreme scarcity in the borrow market. Why the stock is hard to borrow right now. And this brings us directly to GITS. Our screener flagged Global Interactive Technologies Inc. because its annualized cost to borrow fee is an astonishing 932.3%. Highlight, 932.3%. That's nearly 10 times the stock's value each year just to hold a short position. With an estimated float of only 2.4 million shares, GITS has a relatively small pool of shares available for trading. A high CTB fee like this, combined with a small float, means there's a huge imbalance between the desire to short GITS and the actual supply of shares available for borrowing. While the exact number of shares currently available to borrow is unknown, this 932.3% fee is a screaming indicator that GITS is incredibly hard to borrow right now. Our internal composite squeeze score for GITS currently stands at 42.5 out of 100, reflecting this elevated CTB level among other factors. Squeeze mechanics explained. So, how does this hard-to-borrow situation relate to a potential short squeeze? A short squeeze happens when a stock's price starts to rise, forcing short sellers to buy back shares to limit their losses. This buying pressure, in turn, pushes the price even higher, creating a chain reaction where more short sellers are forced to cover. When a stock like GITS has an extremely high cost to borrow and a limited float, the squeeze mechanics can become particularly intense. If the price starts moving up, the pressure on those paying 932.3% to hold their short positions will become immense. They'll be incentivized to cover quickly, but if borrowable shares are scarce, this can create a frantic rush to buy, sending the stock price soaring. However, it's crucial to understand that a high cost to borrow does not guarantee a squeeze. It can also mean that short sellers have very strong conviction that GITS's price will go lower, and they are willing to pay a premium to maintain those positions. Dilution risk check. Another critical factor to consider for any potential squeeze play is dilution risk. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This influx of new shares can depress the stock price and make it much harder for a short squeeze to gain traction, as the market is flooded with additional supply. Even with a high cost to borrow, significant dilution can completely negate a squeeze thesis. For GITS, we've conducted our check. We found no recent dilutive SEC filings such as -1, -3, or 424B forms in the last 90 days. This means that, for now, GITS isn't actively working to increase its share count through these common methods, which is a positive sign for any potential squeeze scenario. Before we continue, let's quickly reiterate our disclaimer. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. If you're following GITS, here are a few key things to watch. First, continue monitoring that sky-high 932.3% cost to borrow fee. Any sustained increase or decrease can signal shifts in short interest or borrow supply. Second, keep an eye on the availability of shares to borrow. If this number becomes known and starts to shrink significantly, it could amplify squeeze potential. Third, look for a sustained increase in trading volume. GITS's current relative volume of 0.1x average is very low. A sudden surge in volume could indicate renewed interest. Fourth, watch for any reversal in the current negative price momentum. A breakup of key technical resistance levels, perhaps fueled by positive news about GITS's feigning platform in South Korea, could trigger recovery. Global Interactive Technologies Inc. GITS presents a fascinating case study with its astronomical 932.3% cost to borrow fee and small 2.4 million share float. While it's clearly hard to borrow, and our dilution risk check came back clean, remember that high CTB is a powerful signal, not a guarantee of a squeeze. Short sellers are paying a hefty price for their conviction, and market dynamics can change quickly. Always conduct your own thorough due diligence. What are your thoughts on GITS? Do you think this internet content and information play could see a squeeze? Let us know in the comments below. If you found this analysis helpful, please hit that like button, subscribe for more unique stock insights, and ring the notification bell so you don't miss our next video.